A new year is upon us, so how should we handle the markets? Well, here are 5 ideas for you. Number 1, expect lower returns overall, but particularly so for US equities. The triple peaks in economic growth, earnings growth, and policy stimulus will likely result in lower returns for US equities in 2022. Then there is inflation, which is running much hotter in the US than in Europe or Japan. So US interest rates will rise, possibly much faster than the markets are anticipating at the moment. That's going to make for a rougher ride in 2022. Number 2, prefer European and Japanese equities over US stocks. European and Japanese equities are more defensive given lower rates of inflation, likely leaving them with 0 rates and yields for longer. And European and Japanese stocks enjoy much larger yield gaps over government bonds compared to US equities. That yield gap between the equities earnings and the 10-year government bonds is around 7% for Europe and Japan, compared to around 4.7% for the US. Number 3, prefer value over growth. We have likely seen a multi-year peak in growth stocks outperformance against value stocks. And rising interest rates are more likely to damage growth stocks than value stocks. That's because growth stocks are dominated by the tech sector. And a greater part of tech stocks valuation is in more distant earnings, vulnerable to rising rates. Number 4, prefer China as the emerging market proxy play. Emerging markets will likely struggle given their lower vaccination rates, rising inflation, and weak policy resources. But China now appears to be easing financial conditions with lower rates, selective government spending, and administrative policy stimulus likely to boost the stock market. It can do that because it was restrained while developed market central banks and governments were throwing money around. And then there is the much lower valuation, 12 times forward PE against 15% forecast earnings growth. Number 5. Now I recognize that this is a contrarian trade. Most traders appear to expect the US dollar to strengthen in 2022 on higher short-end US Treasury yields. But I think it's the real yields, the inflation-adjusted yields, that will matter more. And here I see US inflation running faster than Treasury yields, resulting in declining real yields. So I see a weaker US dollar against the major currencies over the course of 2022.